probability trading strategy, you're full of crap.
Things aren't working, then that's a quick trip to the poorhouse.
To learn how to drive the beater before you can drive the Lamborghini.
Now you're playing with the house's money.
All right, now you're playing with the house's money.
Yeah.
Wow, Mike, happy day after Easter. And I know you had a great Easter. We had a great Easter. And I really appreciate your basically just sending out a lot of blessings and thanksgiving to a lot of people across the internet. So that's absolutely awesome.
Yeah, thanks a lot. Like we were mentioning just before we hopped on that was it was a very transformative Lenten season for me, and yeah, just really thinking about individuals with a lot of intention, praying for those individuals, and then sharing a quick note with them one at a time. And that I think that's something that I'm looking forward to carrying forward. And if somebody hears this and wants to hear more, I'm glad to open up. But it was really, really special. And
Yeah.
shout out to Father Mike Schmitz for the idea.
Yeah, I mean, I absolutely love that because we talking earlier, as we said, as we said earlier, that the being able to encourage people is in a world that needs encouragement is something that we both believe in very strongly, and I think it's seen in the services we offer, the people who subscribe to either your services or my services also. So
Great.
now comes the big question for today, though. You ready?
Mm-hmm.
Okay, I'm going to do this in my radio voice. Okay.
All right,
So,
I'm ready.
hey, everybody. Does Trump's tariffs or Trump's tariff troubles have you down? Has the S&P 500 diving over 16% and the VIX screaming up past 50? Are you making the mistakes that keep you from finding the bottom? And one of the things we want to encourage you not to be today is do not be a bottom chaser, because in certain cultures, Mike, that might get you slapped.
Yeah, I can name a few for sure.
Anyway, hey, welcome everybody to Trade Your Way to not to Trading Truths. And imagine a trader who went all in on the market, thinking the bottom is here, only to get crushed by the tariff news. This tariff news is, whether you support or don't support the idea of tariffs and what President Trump's trying to do, has been challenging to hang in on the market. But we're going to do a deep dive. So hang tight to the end, because you're going to get 3 just absolutely phenomenal ways to approach the bear market bottoms. And so you'll get the secret to trading with unshakable confidence, no matter the chaos and the noise. And so, anyway, so Mike, tell everybody about yourself. You got such a wonderful, introduce yourself to everybody.
Yeah, my name is Mike, and yeah, I feel like this is like setting up for a meeting of some kind. Yeah, my name is Mike, and I've been through a few bear markets. And you know what? It's almost the same kind of song and dance every single time. It's where you'll see loads of headlines that are emotionally charged. I would say. I think that's probably the kindest way that I could say it. And whenever I would take a look at those headlines, the only thing that it would end up doing for me is getting me scared or prompting me to take some sort of action. Maybe it would tick me off a little bit, get me excited. And then none of those things are good ways to deal with any of this stuff. After getting kicked around for so long, I came up with I discovered William O'Neill, and I found out that we don't really need to be that dialed into the news like that. We're trying to figure out how we're going to predict what's next. and it's more
Right
about
on.
having a process, having a systematic process and a way to manage risk. And so that's what I do with Mara Wealth and the people that I'm coaching over there. And it's also what I cover in some of my books, like the Trading Mindwheel.
Yes. Hey, welcome. Is it Gione down in Brazil? And I think, and so welcome. We're glad to see you're on board. And Mike, that's exactly right. You're the founder of Mara Wealth, and you've written a wonderful book called. Oh, and I forgot to get the books. Hold on. Oh,
Yeah, I see yours right behind the chair up there. Trade Your
yeah.
Way to Freedom.
And then,
That's an excellent one too.
and then Mike's book.
Oh, what? Oh, it's
Whoops,
got the
wrong book.
same colors. Very similar colors there.
I tell you, Mike, you and there we go. So here we go.
There we
How's
go.
that? And so,
Perfect.
yeah, I have stacks of books on both sides of my desk, and this is the Trading Mind Wheel. Absolutely phenomenal book you want to check out. And then, if you want to get them in combination, here's my book, Trade Your Way to Freedom, and it's called Retire Sooner with More Money and Less Fear, where I share again. Both Mike and my book will help get you on the right footing, both from a mindset and a mechanical standpoint. And so for
Mm,
me, I'm Dennis Wilborn, the founder of AutoPilot Trading. Guy's been around for a long time doing my thing in the market. And I agree with you, Mike. I was such an emotional trader for the first, oh gosh, probably 5, 10 years that I was trading, blew up
mm,
2 accounts. And I'm not talking about like a couple of $1,000 accounts. I blew up some six-figure accounts, which made my wife really. I was surprised that she stayed with me for 51 years,
mm.
which we did celebrate our anniversary
Yeah,
yesterday.
yeah,
Uh,
yeah. Happy anniversary, Dennis.
Thank you. And but the thing about it is, it just some of us learn slower than others, and what got it for me is, yeah, plugging into Investor Business Daily, William O'Neill and the way he traded and traded in his book on how
How to
to
make
trade
money.
stocks. Yeah,
How to make
and
money.
yeah, is that it? How to trade stock? No, how to
How to
make
make
money
money in
trading
stocks.
stocks.
Yeah,
There we go. And that got me started on the road to recognizing that I needed a mechanical system because for me at least, utilizing a mechanical system takes the or greatly reduces the emotions from the trading because they're based on objective, not subjective reasons to get into the market. Because if you're trading from a subjective standpoint, God have mercy on your soul because you're gonna.
mm,
I think you're setting yourself up to blow up, and then you'll be wondering why the heck did I? How did I blow up again
mm.
and again? And
Yeah.
the fact of the matter is, matter of fact, let me ask you a question. Do you know somebody who's blown up more than 2 accounts?
Somebody that's blown up more than two.
Yeah.
Yeah, yeah. I could name a bunch of people that have blown up multiple times.
Wow. But they kept at it?
Sure. No, you've got us. I think that a few of the
Yeah.
people that we've spoken to on that we've interviewed already mentioned that they blew up a couple of accounts too.
Yeah, right on.
But yeah, like it takes a certain tenacity to be a trader, to be a successful trader, and it doesn't mean that you necessarily need to blow up your account either. Hopefully, in this show and maybe in this episode too, will help some more people prevent that. But yeah, blowing up is it's not fun.
Yeah, maybe we should write a song about it. Back in the day, back in the old days of rock and roll, there was a song called breaking up is hard to do, and
Mhm.
maybe we should do a song called "Blowing Up is Easy to Do." I don't know. Um, and but yeah, blowing up account, and I think it takes a certain. I think the most striking story I ever heard of somebody who blew up an account. He blew it up, then he basically went to work studying, applying and developing his process and his system, but he didn't have any money to trade. And so
Mm.
you know what?
What do you do?
He took a part-time job driving taxi cabs just to generate to basically build a s a port the money, the
Mhm.
capital to be able to start trading again. And then he went on to become a very successful trader. And because sometimes the mother of necessity, we will do and we will go to any lengths to make sure that happens. And we're going to be talking about that a little bit today. We're going to talk about processes. We're going to talk about psychology of trading, some of the things that you can look for with being learning how to be a bottom picker and that kind of stuff. And but what I was going to say is let's tackle that the mistakes we all make. So why is chasing the market bottom in April 2025 such a risky bet? And we're going to get directly into that. But what's your answer to that, Mike? Why is it such a risky bet right now to try to chase this bottom?
Well, if you're trying to just pick a bottom, though some of the problems with that are that you're trying to forecast what's going to happen tomorrow. I think
Mhm.
that that's where, and you could do. It's more risky to do that now than it is when you're in a trend. I think that there's so many people get into the habit of trying to think that winning at trading is a matter of forecasting what's going to happen tomorrow, what's going to happen next week, next month, next year. I think that is I think that that mindset gets people into a lot of trouble. And one of the ways that it gets people into a lot of trouble is when you're trying to do it for, say, this bear market that we're in. It it certainly looked as though the market tried to find a bottom a week or
Yeah,
two ago. And now,
right.
given the action that we're seeing here today, maybe that's a little less certain. So,
Yeah. So, or yeah, and I agree with that wholeheartedly. But what about I think also some things that oftentimes drive people to try to trade bottom or figure out the bottom is lack of patience. In other words, they get tired of waiting, and
mhm,
because it takes a lot of fortitude, intestinal fortitude. In the old days, you used to call it guts. It takes a lot of guts to sit on your hands and not do anything, not go to your mouse and go click and buy something out of with nervous energy. It takes a lot of guts to be able to do that. And I think sometimes traders, you know, rather than looking, okay, what can I be developing while a market's doing this correction, doing this bear market thing? What can I be developing in my as a trader? And part of what you can be developing, of course, is becoming a better trader, right?
mhm. Yeah,
Working on the
yeah,
mental
absolutely.
side, working on the mechanical side. And then that prepares you to be stronger to when the market does finally turn around. And
Yeah,
hey, want
I
to give a
couldn't
shout
agree
out?
more. And you know what else happens in this kind of environment is where you'll get a bounce, right? Or you'll see the market finally start to turn. And let's say that you don't see any quality setups, and then all of a sudden the market
Right,
starts to climb higher, and then all of a sudden, like other people, maybe in some circle that you're a part of, maybe on social media, start posting, like, "Oh yeah, I'm up X% right now, and I just made all this," and then you're sitting there feeling like, "Oh man." and I'm here following a process. I should have been doing what that guy's doing. And then now that voice is in your mind.
Oh
That's
gosh,
the
yeah.
voice that needs to be squashed every single day, and that's why having something like a mental preparedness prompt for yourself really comes in handy.
Yeah, and it help let's come back to that mental preparedness prompt. We'll talk about a checklist, but I wanted to just basically share something with everybody just real fast. Let me see if I can. There we go. Hey, I if you in case you've never gone through a bear market bottom, I did a video over my YouTube channel about 8 days ago, but it's ignore these 3 clues and you'll miss the market bottom. And what I'll do is I'll just lay I encourage you, go over and take a look at that. Just make sure that
Oh,
there
cool.
we go. And there's the link for it. What if you could spot bear market bottom before the bounce? And I go over and show you 3 of my tails that tell me when the market's going to bottom. That, and if you, like I said, if you've never been through a bear market bottom, that will definitely help you get back into or figure out how to trade a bear market bottom. So, anyway, I
Mm.
just wanted to share that with you really quickly. But let's hit back on what you said earlier, Mike, because that really intrigues me. You said have some kind of what are the steps you go through to basically balance yourself where you will stay out of the market until it's time. Do you have a checklist?
Oh yeah, so the you it's important to have a what I would call a mental preparedness checklist, something that you're going to do before you even turn on the computer. Now, this is going to be something that's very good for the person that's already thought through their trading process. Maybe they have a system already. This is not going to help the person that they just opened up a Robinhood account, have no idea about the market at all, and is just like, all right, I'm going to sit here and meditate, and now all of a sudden the money's going to start falling from the sky. No, that's not
Yeah.
what this is about. But presuming that you do have a plan and you do have a system, this is something that's going to help keep you grounded and centered and focused on the plan and not get distracted by the blinking lights of the market. So one thing that you'd want to do before you even turn on your computer is to start to review what your plan even was and to review what kind of a trader am I? Right? Start to ground yourself in something like that. Another exercise that I have for myself personally is prayers. But
Right on.
for other people, even just breathing exercises where you're able to get grounded, get centered, and then focus on your process, focus on your plan. What is it that you had planned to do and why? What was your analysis and why? And to remember what the longer term outcome of that is, because it's very easy to get wrapped up in the day to day of the market without thinking of the longer term outcome. You have one trade
Yeah.
today that uh, or you're tempted to make a trade today, but well, what's the longer term outcome of sticking with your process? So by
Right on.
reinforcing that right at the beginning, then that helps set you up for a more successful day.
I agree wholeheartedly. And one of the things along that same line is I pre and I know you do also. I pre-plan my trades. In other words, so that I've limited my exposure to the market. If I get filled on anything that I put in an order on today, it will be a limited exposure because I know the market is really wonky right now. Uh,
Hmm.
but for me, I do my analysis on Friday and Saturday. I put in, and then I put in my orders with my first triggers 3 OCO orders. I put that in on either Saturday or Sunday, and then
Hmm.
they are literally fire and forget.
Hmm.
Basically, because if they get filled, it automatically puts in my stop loss and automatically puts in my profit targets. What who could ask for anything more simple? And
Yeah.
it basic what it does is it allows me to be totally free emotionally
Mhm.
because I know my orders are taking my it's managing itself. Because if I was sitting there watching the market up and down and up throughout the day, I would be going absolutely nuts. That's one of the things I had that was one of my Achilles heels that I had to
Mhm.
eliminate from my trading. How do I stop watching the market all the time? Because when I would do that, it would stimulate my impulsiveness and my compulsiveness to do something. And
Mm.
so I just want to give a shout out back to Charlie. Thanks for the kind words about that and the anniversary. Charlie, appreciate that, buddy. And then also to Dennis, yeah, happy Easter the day after Easter.
Mm.
And wow, Mike, the thing that's really funny is we did this really cool outline for today's session, but I think, and we're going to get into that here shortly. But yeah, hopefully the folks. I got a question for folks. If Mike and I put out an outline, not an outline, but a summary, I think Mike may do this for his members. But if we put out a summary of the this podcast, would that be something to be interested in reading? Just to put it a yes or a no down in the chat box. I'd really appreciate that. And or leave a comment on Spotify, on our YouTube channels, on X, because I I think some of this, if it was in written format, some people learn better with written format, some plays visual formats. Okay, Mike, here is the bottom pickers versus process traders. Small caps are down over 20%, and everyone's hunting for a bounce.
Mhm.
Why do traders keep getting burned trying to pick bottoms? And so I think we covered a little bit about that. But again, and also talking about what just driving traders right now. What specifically are you in your process are you waiting for? Let's share what we're waiting for. And you go first to
Yeah, thank
basically
you.
give you the green light to trust your process and not just your desire to pick the bottom.
Yeah, absolutely. So just like how you had mentioned before, it's about having a process-driven or a systematic process. So that, and you want it to be rooted in something in reality, something that's been historically proven, not just something that we
Mm.
cooked up one night after a bender. So what the process that I follow, it's basically the same thing that O'Neill did. It's the same kind of stuff that Minervini did. And after studying those guys for so many years and a few others, I came up with my own version of it. And what I call it is the three lenses of market readiness. I don't know if you could see this here,
We
but
can see that really well.
it's basically what I look for. I'll look at the general market. I'll see how the market overall, the major indexes are moving across time frames, and I'll take a look at some of the internals of the market, things like distribution days, things like follow through days, things like the number of stocks making new 52-week highs and new lows, and those things are great at helping me to determine what the overall market is doing. Then I'll consider my system, and my system are the stocks that pass my screen. So I trade growth stocks, so I'll run screens on those and I'll build and manage watch lists. If I find
Sure.
that more stocks are passing those screens, then that's a good thing. Then there's more merchandise on the shelf. If I'm finding quality setups, then that's a good thing. If the shelves are empty and the stuff that's left on the shelf is garbage, then that's also telling me something about the overall market mood, that part in the center. And then
Right on.
I'll consider my personal performance, because if I'm being disciplined and I'm following my process and the trades that I'm taking, those trades that I'm taking should tell us something. And if they're performing
Right on.
well, that tells us that, oh, maybe it's a good time to start to add a little bit more exposure. But if you're putting on the best trades that you find and you're sticking to your process and those trades aren't working, well, guess what? That's giving you some very valuable information to stay out. And so that's why I've coded it in this red, yellow, and green. And I actually, just the other day, I made this slide too to help talk about progressive exposure and what I do in each one of those conditions and how I'm sizing. Basically, you scale up if it's a green condition, and if it's a red condition where things aren't working, you size way down that way. If you do have a couple of trades in a row that are losses, guess what? They're teeny tiny paper cuts, and you could come back from those pretty easily.
Yeah, without a doubt. And so when you first set up, and let's give everybody, let's open it up and let people see exactly. So what's your initial, on average, what's your initial stop loss target?
On average, my stop loss tends to be in the range of about 5%.
Okay. And then what do you target, a profit target, or do you basically, at what point do you know, when's it time for you to take profits?
The first time that I'm looking to take profits is roughly when I'm at about twice what I've risked. So on your average trade, that's around 10%. Um,
Okay.
and it adjusts by market conditions, though. So let's say that we're in a market condition like we're in right now, and trades aren't going quite as far. And let's say that most trades are only going about maybe 6% on a breakout trade.
Sure.
If I see that and my average loss that I would take is 5%, then that tells me that I need to adjust because I
Right on.
can't risk 5% to only make 6%. The math doesn't really work out anymore. So that would have me either not taking trades, or if I find a trade that is very tight where I could take just 3% risk, then maybe it makes sense. But then I'm
Right on.
still assessing, is this a quality trade? Yes or no? Is this a trade in my system? Yes or no? And so after I'm going through all those check boxes, then it's like, okay, let me put some money into this.
Right on.
But I'm never in a
So
rush
yeah,
to
that's
put
one.
money into the market at all. It's waiting for the right opportunities.
Right now, it's so funny. I only had 2 positions on. I was invested this morning at about 5%. That's all I was, 5%. Now, one of my trailing stops was hit this morning,
Okay.
and no big deal. When I celebrate when my system works to protect me, it protects my
Mhm,
capital, but then it also generates my growth.
mhm,
And so stop loss was hit, and it took me from being 5% invested all the way down to I am now 1% invested.
mhm,
And at least I was. I may not be that much anymore. I may be full in cash because my system's working for me. It's based on my rules.
mhm,
It basically is on based on my rules, based on my mechanical system that's worked for me for, gosh, the last 15 plus years, generated an absolutely phenomenal returns on that during that time frame. And the thing about it is it, and I'm good with that. And that's part of the thing, I think, that part of the maturity in learning how to be a master trader is learning how to be good with the outcome if your system works the way it was supposed to work. In other words,
mhm.
it may be a loser. You may get 10 losers in a row. But if your system is functioning properly, that's okay. Now, and so anyway, so
Yeah, I think that what you
TYSM.
said there was great. That part where that you said about if you get stopped out of a trade that you're actually celebrating, how many people do that? I think that's a
I don't
beautiful
know.
thing that you have there, and I think that's
Yeah.
would also be a good mental preparedness prompt that you could tell yourself too, that, "Hey, if my stop is hit, guess what? that's my capital being protected. That's actually a part of the system, and that's something to be
Yeah,
celebrated. Whereas most
I
people
agree.
that you get stopped out of a trade, oh man, like that's another loss, and the throwing a fit.
We've been there, we've done that.
Yeah.
The reminds me of a just a real quick story on that because the emotion can run so wild, and then I'll get into how I covered this the same thing that Mike's talking about. But I'd been tracking a trade, and it was going really good, and then all of a sudden, it turned against me and just kept falling throughout the day,
Mm.
and it was before I used to use the mandatory use of stop losses. And so I lost on this trade and lost more than I should have lost. I became so angry. I came downstairs from my office. I went to a cabinet drawer and I just slammed it as hard as I could. And the face of the cabinet actually came off in my hand.
Mm.
And I'm going, uh-oh. And my son, Brandon, who was trading with me at the time, comes running down, hearing me the big bang in the kitchen. And
Mm.
I'm holding the cat and I go, get the wood glue fast. And one, don't tell your mother. And and so we glued it back on. And the reason I share that with you, if you are going through an emotional time about your trading and that kind of stuff, is as Mike said, he has these rules, but the rules were generated, and I have my rules also, but they were generated oftentimes by the painful things that happened to us while we were trading. And so you
Yeah.
adopt the and my simple way to stick with the process and avoid trying to pick the bottom is a couple of things. One is I look to the left.
Mhm.
You reference this. I look to what has happened previously to see what other bottom market bottoms look like. What does the current price action and everything look like compared to some of those? How does what's going on right now compare to the year 2020, 2000, 2007, 2008 timeframe? Even go back to 2000. Heavens, go all the way back. Use the S&P and go all the back way back to what started the Great Depression in 1929 and see what the bottom and the look like and what the price action look like. And what you'll find on a lot of those is one, it's finally hit a testable level of support.
Mhm.
You get the momentum shifting back up to the upside, and then you get a candlestick reversal signal that says, okay, the buyers are coming in. Now I have my green light. And then it then very rapidly goes above the 8-day moving average, the 20-day moving average, the 50-day, the 200-day moving average. And as it progresses through, those give me opportunity to take little bites. You know,
Mhm.
and take a little bite when it approaches or goes above. And we'll take a little bite one when I have the reversal candlestick. Second bite when I go above the 8-day moving average. Third bite above the 20-day moving average. And then from there, I'm probably in close to a full position on that. And then I watch like a hawk the 50-day moving average. Do I make it? Do price actions make it above the 50? And if they do, then that oftentimes tell me that I'll take some profits off the table at, you mentioned, 10%, 15%, 20%. Say I take some profits off there. And then I slide my trailing stop because, like you, I carry somewhere between a correction, 5 to 8% initial stop. But my average actual stops of things that are executed is about 3.5%. And because there's the what you plan and then what you execute is two different things. And so
Right.
that's how I avoid the emotions of being a bottom picker, but being a devout process trader. And it keeps me out of a lot of trouble. And let's see, we talked about what's one easy process, and I shared the video
Mhm.
on on how I tell when it's a market bottom. Let's see. Hey, what Mike and I we talked about our books already. So what about t- the tariff the tariff message? Okay, this is process over prediction. The tariffs flip daily. Did you see that where President Trump told Jerome Powell today he was a loser if he doesn't lower interest rates? But and so
No, I missed
how to make
that one.
how to make friends and influence enemies. And so,
Yeah, yeah, I
so
wonder
anyway,
what Dale would say about that one.
yeah, I'm sitting there going, oh yeah, okay, let's see. Fed's holding the rates steady, and so why is predicting the market's next move a fool's game, at least right now? What's your thoughts on that?
I'm sorry, say that one more time?
Okay, why is trying to predict the market's next move a fool's game right
Mhm.
now?
I think it's not just right now, I think that's all time. Like, the don't try to predict, just, follow process and you're better off. I've tried both, where you're trying to predict what is going to happen based off of macroeconomics, based off of tea leaves or whatever, and, at best, it's hit or miss. So, a much less stressful way is to trend follow and to do the kind of process that you and I are both doing now, where you have a process that says, here's good merchandise, here's good reward to risk. You take those trades. If they work out, great. If they don't, then that's fine too. And what you're basically looking for is high probability, high reward to low risk.
Right on.
Um,
Yeah. Because sometimes I struggle with this concept though, because we talk about predicting. I use my probability, the probabilities of a particular move based
mm,
on what is tend to happen if momentum is shifting and starting to roll up. There's a
right,
strong
right.
probability that prices are going to continue to move up, right?
Mhm,
So, isn't that a form of predicting? And also, we use our technicals to establish, okay, here's the level at which prices will probably go. And oftentimes that's right on the money. And if it drops below this area, this is where I want to get out, this stop loss area. So sometimes I wonder, Mike, while we say, and I think maybe what basically illuminates this is the process I just went through about understanding how the probabilities work
mhm,
is basically not really predicting, because if I predict and say, I think the stock is going to go from 150 up to $200, but I'm
mhm.
not backing it up with any data or any actual applied knowledge. Okay, great. We may definitely have to edit this one. Anyway, thanks for bearing with us, guys. I really appreciate that. Sorry, Mike had to be taken away. Uh, and yeah, really, that is really absolutely weird. And the final question is basically confidence built on results is fragile. One of the things that also James Clear talks about in his book, Trade Your Way, in his book, Atomic Habits, is he basically says focusing specifically on outcome will oftentimes result in focus on an outcome will oftentimes not give you what you're looking for and not give you the results. It's the literally focusing on the process and then focus on who you want to become. And so hopefully you want to become a master trader and the by focusing on the process of your trading system, like with AutoPilot Trading System in my book, Trade Your Way to Freedom, I highlight my specific uh, systems that I utilize on a daily basis to get in and get out of trades and all that stuff, and what I share with our premium AutoPilot Trading members. And so with that, what I want to do is is what I continue to do is I have to remind myself, focus on the process, focus on the process, focus on the process. And that's the way I lay in my orders every week, following a very specific process. I have a process for how to select the stocks I'm going to use. I had a process for how to select the ETFs and the leverage ETFs I'm going to use. And the thing about developing a process, which is very important, the thing about developing a process is that it keeps us where it reduces the variables we have to work with, therefore simplifying what we have to do in the area of trading. Because oftentimes, when I start out my watch list every week, I have approximately 50 to 75 stocks that make the final cut to be included in my initial watch list. I then sort through that to catch it, to break it down to simply five to 10 stocks. And that is those stocks then become my focal point for the week. Same thing for my leverage, my ETFs. I have 8, and of the 8, normally no more than 2 or 3 will actually give me trade signals for the week. So my universe of stocks, or my focus list of stocks, has gone from, let's say, and ETFs has gone from maybe 80 down to a handful, 2 handfuls of about 7 to 8 entities, that then I utilize my process to target shoot my entries, identify the levels where I want to get in, put my orders in, and on those orders is also included how I will get out of the trade for either a profit or a small loss. And so that's the way I do my swing trades. And that's the way I basically fight this issue of confidence built on results is fragile. And the other thing that in that arena is, if I get results that are just that go to my head, oh my gosh, I made a 100% move on a particular stock or something like that, I can basically think I'm better than I am. And I've been doing this a long time, and I'm pretty darn good at it. Basically identified in the How to Make Money Trading in Stocks Success Stories, written by Amy Smith, and identified as, a really good stock picker. But the fact of the matter is I can't let that go to my head. So that basically covers us up. Any questions out there that you might have? Now that I hope we have the sound issue taken care of. And I want to thank you guys for hanging with us as we were working through that. Ah. Okay, so for you, when you're trading confidence, it is a big challenge with trading confidence. So what are you looking for in April 2025? I know that when I look at my charts, I know that I am getting close to a bottom, but I just don't know exactly where that's going to be. So, what tools, if you want to just leave a comment, what tools or habits you as a listener that you need to be working on to build your confidence? Do you have a list? Maybe it's just, as I said earlier, make it just one. What do you do to, okay, what do you do to boost your confidence when you have basically had several trades that just didn't work out the way you wanted them to work out? What do you tell yourself? What do you say to yourself? Hopefully, it's not, oh gosh, here it goes again. But hopefully, basically can focus on, hey, I traded my process. I did it well. I am a great trader, and I know these things are going to turn back around. I encourage you to also take a look at the concept of probabilities. You don't know have to know the exact probability for a particular trade. However, if you know that this setup has a better than 50% chance probability of succeeding, that starts putting the edge in your favor, and those will tend to work out. So I know that with my system, I'm looking at primarily three different things, and if all those clues are in congruency with each other, I know that the probability of me having a successful trade goes up dramatically. It goes up to 65, 70% that the trade will be successful. Hey, going forward, in some of the topics Mike and I are also going to discuss, we're going to be talking about if 10% of traders are successful and they turn out to be successful traders, and 90% tend to have success, but maybe limited success, and some part of the 90% they fail, totally fail. So, what sets the 10% apart, and how can you become part of the 10%? That's one of the topics we're going to be talking about. And so we look forward, and we're always open for anything you want us to be talking about and discussing. And with that, we just want to let you know that, hey, we hope this has helped you crack the code on bulletproof confidence and how you can make these lessons work for you. And so I'll just say aloha and God bless. Sorry for the technical difficulties today. And see you next Monday. And if you would, on Spotify, leave a review. And if you have any comments and or questions on the YouTube channel, please leave a comment there, on also over on X. Again, aloha. God bless everybody. Have a good one.